Good morning, Robert, and good morning to everyone that's on Facebook. Thank you for joining us this morning. Thank you
Yeah.
for joining us.
Yes. Welcome, Facebook. Welcome those of you on the webinar. It is Financial Fed
Good
Friday.
Friday.
It's the end of the week. We're getting some good information. We're getting revved up to start our weekend. And what better way to do it with some welcome financial information? Thank you for joining us on Facebook. If you're on Facebook right now, if you could just quickly type in and let us know, check in and let us know where you are in the country, because we have people from all over the United States and we just want to shout you out. So if you could just let us know where you're checking in from, that would be great. Rita, do you see that?
Yeah, see,
Hmm?
but
Facebook?
Facebook. I see
Yeah.
it. I can see it.
All
I
right.
checked in from folks are quiet. They're they're watching, but they're not telling us where they're from. But good morning anyway. Good
Good
morning,
morning. No, you could just say, hey, I'm in DC, I'm in South Carolina, I'm in North Carolina, I'm in California. Just type that in so we'll know, where our audience is. No need to be shy. We're going to have a good time this morning because we're going to be going over this new tax information. And that's why we have our tax expert here on the webinar with us, Mr. Terrence Hawkins. So, Rita, my clock says it's 10:01.
I say we get going.
It's time to get started because you know what, you all? It is Fed Friday. Thank you so much for joining us, Terrence. So we're going to go ahead and get started. I'm going to share my screen. So and tell you, Rita's going to tell you more about who we have on the line. That's our theme right there. Okay, that's enough of that.
Well, I didn't even hear it. So
Oh, you didn't?
Now I don't even see your screen. Have you shared your screen?
Oh, Lord. Wait a minute, y'all. Terrence, bear with us. I told you, honey. And I'm normally pretty good at this, too. Wait a minute. Let me try this one more time. Here, wait a minute, y'all. Just bear with me. Give me a second, please. I was all prepared, had it up, and then
Y'all see how she do. She always says me. Y'all always see. She's always the one.
I know, and it's not Rita, it's me. This time, I'm getting there, y'all. Wait a minute. Terrence, this is not normally how we operate, but that's what's going on today.
Don't tell a story. Don't tell him a story.
We have a special guest, that's why. This is the Eye of the Tiger, y'all. We are in the Eye of the Tiger. Getting ready for Financial Fed Friday. Okay, that's enough of that.
Oh, okay. I was getting my Friday party on.
Yeah, so we can take a little bit, y'all. Let's get up and move. Get our minds. This is going to be some great information.
Come on, we fighting them tax laws.
Move a little bit.
No, look at them tax laws we fight.
All right, you go fight. Oh, you're going to have to be
okay, darling. Okay.
Okay. All right, how do I? Okay, there we go. Woo.
Oh.
So this is Financial Fed Fridays. For those of you that are just joining us today, every Friday we meet here live as on Facebook Live at 10 a.m. And this is a live webinar that's being broadcast. And what we're doing is we're pulling back the curtains to give you an in-depth understanding of your federal benefits as well as the best retirement options. So you don't have to work for the federal government to be able to glean some information from glean something from the information that we're sharing. You want to be on here. You want to invite your friends and family and coworkers to get on here as well. You can always register at www, and it's shown here on the screen, RitaBRowlandEvents.com. And of course, if you're on Facebook, you can like us and follow us at Your AB Solutions. And so the purpose of this whole Fed Friday series is we're just really trying to help you map a course to meet your financial destination, whatever that may look like for you. That's what we're here to give you some helpful tips, strategies, things to put in place so that you can get to the financial destination that you have. And of course, if you work with Affordable Benefit Solutions, you couldn't have two better captains than Rita Bailey Rowland and Darlene Jenkins. And as we said earlier, at the start of the year, that Rita and we were going to be bringing on experts to address the subjects that you want to hear about. This seminar, the webinar that we're presenting, is very generic in approach. However, we have an expert on today. This part is not generic. So the information that Terrence Hawkins of Hawkins Tax Service is going to be presenting to you, he is an expert in this field. So please, you want to get you some pen and paper, because this information that he's going to be going over, you don't want to miss it. So Rita, you want to go ahead and what happened?
I don't know. I'm
I don't know either. Let me. Okay, there we go. What? Something's going on.
Yes, I'm gonna be, while you fix it, I'm gonna introduce Terrence to everyone. Well, first of all, thank you, Terrence, so much for coming on to help support this cause of helping get people educated. To everyone, I met Terrence about when? I joined that in 2006, so it had to be maybe about 13 years ago. I joined this company called Financial Destination. And I tell you, it was a company that truly changed not only the lives of the people that was a part of the team, but the many clients that we had, that we helped people to get their financial situation in order. And Terrence is a tax expert. Now, most of you guys know that I'm a CPA by trade. I graduated from George Washington University. I have a degree in accounting. I worked as an auditor, but taxes are not my thing. And so even though I'm a CPA, I did my own taxes for years. But when I really started to build my business, I realized that even though I know a little bit about taxes, even though I know TurboTax and all of those tax programs can help walk me through it, but they really don't know strategy. They really don't know what's best for you. And so Terrence Hawkins is one of those people that if you want your taxes done, you want it done by somebody who really knows how to help you get the most out of your money and pay the least amount of taxes as possible. Terrence Hawkins is a EA. He has over 30 years of experience and 22 years in business. So he's not someone who just started yesterday. He's been doing this thing for a while. He is the founder and the CEO of Hawkins Accounting and Tax Services, and he's a graduate of UNC of Charlotte, University of North Carolina.
Yeah, baby.
Yes. Mr. Hawkins.
Let's do it.
Yes, Mr. Hawkins is an enrolled agent. He specializes in self-employment and home-based business, but he can help everyone in terms of taxes. Mr. Hawkins has helped thousands of clients who starting up their business, trying to maintain, even have a profit in business, and saving them thousands of dollars in taxes. Now, for me, that's a key word right there. Those are key few words: saving thousands of dollars in taxes. And most of us put all of our money in a thrift saving plan or 401k because we're trying to pay the least amount of taxes now. Sometimes giving all of our money to a 401k or thrift saving isn't always the right strategy, and that's something that Terrence helped many people with. Mr. Hawkins is a sought after speaker at ESPN Charlotte, and he has a weekly radio host that he does. So he'll be doing that right after this, I think. So he's going live. Right. He is a member of the National Association of Enrolled Agents, means he has been trained to do these taxes. Yes. He's just not someone who's just doing it, who like taxes and got a software. He's been trained by the top people so that he's not someone you have to worry about. He'll sign you your tax return. Let me just say that. Many of you get back all this money, but people won't sign your tax return because they're not doing something always right. So that's just no further introduction. We're going to introduce Mr. Hawkins, and let me leave you with the last thing. He is a part of the American Society of Tax Problem Solvers. Now, here at ABS, our thing is helping you to find a solution to a problem. He's actually is a person who can help solve your tax problem. Without further ado, Mr. Terrence Hawkins.
Awesome, ladies. It is so happy to be here with you this morning. I'm loving what you guys are doing with spreading information, spreading education to everyone that's out there. And I believe if we just continue to educate and give people the information that they need, we're doing our part in this society. So I give you guys kudos and stuff. And thank you for the invitation. And it's my pleasure that y'all should be here.
Yes, thank you. So, Terrence, we're going to just jump right on in with the core because get right to the meat of the this tax code and the changes that have taken place. Can you just give us a rundown? I know for myself, and I hope you all don't mind, but hey, I have tax problems and children and things I want to know about too. So can you just briefly tell us of the changes with the personal exemption versus the credits, how that's going to affect our paychecks? What does that look like for us?
I'm glad you have to say that. And I hope you guys are real. Y'all are real here, right? I can be real.
Yes, we are real.
We're real.
Type in you all and say I'm real so Terrence can see.
All right. I'm going to be real and take the politics out of it. Let's do that. Let's take the politics out of it and let's be real today.
Yes.
Guys, and I'm glad you said that. I'm glad you said something about personal exemptions. Because as you notice, when this whole tax reform was being talked about, and everybody was, talking and explaining, we're going to do this, and the left saying this, the right saying that. They never said anything about personal exemptions. They always was talking about standard deductions doubling. They always talked about that, but they never talked about personal exemptions. So let's talk a little bit about what personal exemption is. Every person that's on your tax return that you have in 2017, you was able to get $4,050 in an exemption. An exemption is part of the total deductions that you get to reduce your income.
Mm-hmm.
So if everybody on your tax return, so does you, if you have a spouse, your spouse, you have your kids, that's your dependents, all of them, you used to add up, and that little line on that 1040 on that page 2, you used to add that up times $4,050. So you got $4,050 in a tax deductions in the form of exemptions. In that tax reform, in the code, they deleted or took away the personal exemptions. So there's no more $4,050 per child. But what they did was they increased, or sometimes almost double, the standard deduction. So I used to tell everybody, your true deduction before, unless you're itemized, the true deduction was your standard deduction plus your exemption gave you a total deduction. So you need to really look at things as total deductions, not just one or the other, okay? Because last year in 2017, if you were a single person, your standard deduction was $6,350 was your standard deduction. Then if you add that plus your $4,050 in exemptions, you're over $10,000 in total deductions. Are you with me?
Yeah.
In total deductions. You got to look at things total. In total deductions. Now, when they increased the standard deduction to $12,000 starting 2018, that's a good thing. So it went from $6,350 to $12,000. Now, that's all we heard about, correct? We heard about the standard deduction is doubling, it's doubling, it's doubling. It's going from $6,350 to $12,000. And that was the talk. Then it was like married filing joint is going to go up to $24,000. That was the talk. Okay? So people was thinking, wow, I'm going from $6,350 all the way up to $12,000. That's a nice big jump. But in reality, you had an exemption of $4,050 that they didn't talk about that they got away with or they took away. So you really increased from $10,000 and $4,000 to $12,000. Okay? So the real increase of what you got, now that's an increase. I take any increase. Don't get me wrong. Okay? Don't get me wrong. You give me $1,000, I'm happy. Okay? But the thing that I want people to understand, and when I'm talking and doing these calls, I always talk about, you're giving somebody a piece of candy to keep them quiet while they're eating steak. That's what I always talk about. And what I got that from, guys, I'm from the country, North Carolina, down here, we doing it up. I can remember going into the church house, right? The church house. But going into the church, I can remember that when the kids was acting up, grandmama basically took out a peppermint candy. She broke it because she didn't give you the whole piece. Okay? She took out the piece of peppermint candy. Y'all know she had to share that thing. She took out the piece of candy and she gave it to us to do what? To keep us quiet and happy so that the service can go on while other things was happening. So what I say is sometimes you got to be careful of, hey, yes, we're going to give you a couple of deductions here to save you a couple of $100 or $1,000 while we are saving millions over here. Be careful for that. Now, but don't get me wrong, a savings is a savings. So what's going on is you have no more exemptions, but you do have higher standard deductions. So if you're a single person on the line today with no dependents, you was already getting a little over $10,000 in total deductions, and now you're getting $12,000 which is $1,000 and something increase. If you're at a 10% tax rate or some tax rate, that's a little over $100 and some that your taxes was really saved or helped you out. Okay. Now, if you had 2 kids or 3 kids, right? You was head of household. Last year was the standard deduction in the household was $9,350. But you had 3 people on that tax return then, you and your 2 children. When you take those 3 times $4,050, that's over $12,000 in exemptions that went away. But when you look at your standard deduction now, it went from $9,300 to $18,000. That's only $9,000 in increase. So if you are a single person to have 2 kids, you just lost money. That's why everybody's kind of different when you're looking at this stuff in the total standard deduction format. We can talk about the credits later, but in just the total deduction part, you lost a little bit there.
But you know what, Terrence, if you think of now here, I done got an attitude listening to you. Let me tell you, I got an attitude because I'm self-employed. So I have a lot of itemized. I can itemize my tithes and all those things. So basically I'm losing because even if they gave me, they did 2 times the standard deduction because my itemizer is always more than that. That's always the same. But truly I'm losing because I no longer have an exemption.
Exactly. Because if you have a single person and you was getting $6,350 and you were itemized, the average itemized around that time, you may have got like $11,000 in itemization. Okay. That's basically adding up your interest for your home, your charitable contributions for their church, your property tax and all of those things. So you had around $11,000 in item. Now, the IRS give you either or. You either get standard deduction or itemizing, whichever one is greater. Whichever one is greater. So if your itemization was lower, okay, than the standard, okay, there, so this was $12,000. So if you don't have $12,000 in from your interest on your home, your charitable contributions, and this and that, they're going to give you standard. So if they give you standard, you're going to get that. And now, to your point, you don't have the exemptions. Because if you were itemizing last year, if you was itemizing and if you had $11,000 in itemization, you also had the $11,000 because it was more than your standard, plus the exemptions that you had on your tax return. It's not there anymore. Now you just lost.
Yeah, we just lost about $9,000 that we gonna now is taxable because
pay taxes on exemptions. Wow.
Exactly. So everybody's situation is totally different. That's why, it gets me when the politicians talk and say everybody's going to do this and everybody's going to do that. Everybody can't. It's a plus and minus. You really have to look at your situation and see what has happened. Get with your tax professional and stuff so they can say, hey, how is it going to affect me? Just because it affects your neighbor or your coworker a certain way does not mean the same thing is going to happen to you. Everybody's situation is totally different. So that's why you need specialists on your side to actually talk to them. If you're just, see, here's the thing. TurboTax sometimes can't talk to you. Okay. All right.
Right.
Or they want you to pay.
Exactly.
You have to pay
right.
that $40 to talk to someone.
Pay it stuff. Exactly.
Right.
So it would guide you. It would guide you with what you're putting in. Okay. To get you what you're putting out. It's just like a computer. I said a computer is really dumb because it's going to kick out what you put in. So you put junk in, it's going to get junk out. Okay.
Exactly.
But you don't have the advice. Saving money on taxes is all about tax planning and getting the advice. So you're supposed to be planning now for your 2018 taxes. You're supposed to be putting things in place now for 2018. Not so much kids can do about 2017 is over. But we can actually do things now to make sure that we're saving a lot of money for 2018 going forward.
Right, meaning the taxes, when you say the 2018 taxes, you mean what we're paying this year when we get ready to file next year in 2019.
That's correct.
Okay.
That's correct.
I'm going to do one thing. If you guys that are on the line, we normally hang up about, 10:25 to 10:30. If you could just hold on a little longer, we want Terrence to go over a few more things. And so if you could just allow us this time to go over what we normally go, you don't want to miss this information. It is critical to your financial destination.
Exactly. So Terrence, what other things should we know about this, the new tax law that, will affect us directly in our, either paychecks or, surprises when we get ready to do the taxes? And this is the other thing I want to ask you. So when we file our taxes this year for our taxes from 2017, we're filing them this year. Are these things in effect right now? Like, will I see this $12,000 standard deduction, or is that going to take place in 2019?
Right. It's going to take place when you're filing in 2019 for the 2018 tax year. So it's January the 1st, the new tax law took in place. So everything that was done in 2017 is going to use the 2017 tax laws. So going forward, so when you get your taxes done this year, okay, this year, you're not going to feel this effect. You're not going to feel the negative effect of, if it's negative for you, you're not going to feel that. But what you are going to get, okay, and this is why, again, give me the candy to have the steak, okay? So it happens now and was voted on now, and you don't feel that brunch now, right? So you don't think it may be negative for you. But in February, when you get your paychecks in February, you might see a little increase on your check in February. So you're thinking, oh, man, this thing is good. I didn't get a hit when I filed my taxes, and I got a little extra $20, $50 back to come back on my check now. Now, where did that $20, $50 come back from? It came from what was new is the tax rates went down. They lowered most of the tax rates. The tax rate is, see, we pay taxes on our taxable income. All the stuff that we're doing as far as having our gross income that we're making on our jobs and, you know, to get some IRAs deductions to get our adjusted gross income, and then the total deductions we just talked about, is all to get to our taxable income. And looking at our taxable income, there's tax rates depending on what we have to pay. Those rates have gone down. And because those rates have gone down, what's going to happen is the payroll, okay, deductions that come out of your check is going to change. The federal. It's going to change. It's going to change positively for probably 90-some% of America, the most, because a couple of the brackets did stay the same, okay? So it's going to change. So you're going to feel like, I got extra money, right? And my taxes was done the same, and I got extra money, right? That's what's going to happen right now. Now, that's a good thing. Don't get me wrong. Again, any extra money is extra money, okay? Give me the extra money. That's a good thing. So that's one big change is this. The rate has changed to go down. So you're going to, but here's the problem with that. Where's the state part come in, right?
Yeah, because Terrence, we have someone, I'm sorry, I don't mean to cut you off, but we have someone that's asking, Tamara wants to know, would you recommend sending extra money to the federal and state to prepare for the upcoming tax year? Would you recommend paying extra towards your state and federal taxes since you're not going to have those be able to itemize, I'm assuming? Okay, all right.
Here's what I actually recommend to you. Number one, talk to your tax professional so they're looking at things. Number two, I don't pay no extra to the IRS, okay? You don't pay extra to the IRS because you can be using your own money for investments for yourself.
Absolutely.
Because here's what happens. If you truly look at the tax form, okay, on page 2 in the tax form, on that section that it says refund, I want you to really read the money or what you're getting back. It's not a refund. We got to kill that word by saying refund. It's really the amount that you overpaid. Look at your tax form. Don't believe Terrence. Look at your 1040 tax return on last year and look at that line. And it said the amount that you overpaid. They're just giving you the money back that you overpaid. Now, here's the question for all the listeners here, okay? If you go shopping and there's a sale and special at the mall and you go shopping and you bought something, okay? You're expecting that deal. When you get home, if you look at that receipt and you saw that you overpaid what you did, what are you going to do? You're going to call that store or go right back to that mall because you want your what? Refund, right? You want your money back because it's supposed to have been less. Why on the world do we wait a whole year to get our money back from the IRS when we overpaid? But we go immediately to get it back from the store. We got to change our mindset and stop overpaying the IRS because they're taking that money, putting it into their accounts, and they're making money off of it on their investments. You need to put that money into your account and make that money there. So what I say is, yes, you want to do some planning and look at, that's why every year you're supposed to look at your W-4s. You're supposed to look at your W-4. That's the statement that you give to your job saying, I'm single, 1, married 2, right? You're supposed to look at that every single year. Don't just do it when you just get the job and let it roll, or don't change it when you get a bonus, you're trying to get all your money back, okay? Don't do that, right? You want to look at it every year, depending on how much you overpaid, okay, during the year on your taxes, and you get that on your tax form. So those adjustments should happen all the time. Now, the new one for 2018 hadn't came out yet, so that will be coming out, and we'll be doing some training on that once they come out.
All righty.
And Terrence, one last question, because our time is up, but it's so much. Can you quickly speak to the property tax and taxes that your mortgage interest and the tax limit that they have put on the amount that you're now able to deduct? I know that's a big issue, and I've been hearing, as I watch the news and watch different states, some people are trying to prepay the property tax to get that deduction, and now the IRS, they're looking at, okay, stopping that. So how, can you just speak to that and give us a little clarity around that subject?
Okay, great. Where property tax is a part of your potential itemization. It goes on your Schedule A, okay? And every state is different. That's why some states was a little bit more upset than the other, because some states had high rates in property tax. Like in California, you're up north, right? It's high that you pay a whole lot in property tax. That number was going to be added to your charitable contributions and to your interest statement to get your itemization going on.
Right.
Now, before the law was going on, they was looking at eliminating it totally until some of those states kind of jumped up. So you can't do that because our members and stuff are getting a lot of different deductions from that, right? So what they did was they put a limit or a cap on it, okay? Now, that $10,000 cap in some states for the property tax, that's not going to affect a lot. Well, it's going to affect some people, okay? But it's not going to affect everybody. So if you pay more than $10,000 in property taxes, okay, it will affect you. So just don't get mad just to get mad, okay? Look and see how many property tax that you really actually paid on it so you can still take it. But here again is the problem. A lot of people that was itemizing are not going to be itemizing now. That means the property tax, you ain't going to get no benefit from it anyway. Because if you remember the goal of what they talking about, they was talking about what? Doing your taxes on a postcard. Y'all remember that? You can do your taxes on a postcard. Because most people that was itemizing, you're not going to need to itemize anymore. You can go standard. That's not a good thing, guys. And number one, I told people real quick, if you're able to do your tax return on a postcard, you're losing money.
Absolutely.
And I can prove it every day. If you're able to do it on a postcard that simple, you're losing money because there's too many strategies out there that you need to know, especially having a home-based business that you need to get. Because if you can do it on a postcard, you're throwing away a lot of money.
Wow. 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 This, Terrence, please, I just want to right now on behalf of Rita and I ask you to please come back because it's so much that we need to expound on even more. So if you could please come back again, we want you to talk about, because you have strategies that you can share with us, right? In reference to some of the things they can do to mitigate these new tax changes.
Well, let me ask you a quick question, Terrence, first. I mean, I asked everybody if they could stay a little longer. Terrence, is there anything else that you think that you can slip in for the next, if you can hang on for another 5 or 10 minutes, hang on. If you can't, you can go back and watch it because it will be recorded and is on our page. So, Terrence, is there anything else in this tax law that you think the listeners need to hear now and not wait till the next time you come back? We have a few more minutes.
Yes.
Take some more minutes so that we can get this.
Okay. Well, one of the main things I want people to start taking advantage of in 2018, and Darlene was actually kind of said it, I'm really talking to everybody about getting a business right now and getting into a pass-through entity. Because what a pass-through entity, and you definitely self-employed, LLC, things of that nature, okay? And you can learn about that. Because there's another tax deduction that was favorable for individuals that had a business, in particular a pass-through entity, where you can start taking 20%, there's a new 20% deduction for the gross income on pass-through entities, okay? So think about this for a second. If an individual made $20,000 in their business, you got your deductions and all that kind of stuff that you're taking care of, your mileage, your cell phone, things people I should talk about. But there's going to be a new deduction that's going to be a below the line deduction, okay? That's after you're right around there itemizing, that's a 20%. So that's another $4,000 that you're taking off the top as far as a deduction, but only if you had a business. So I'm telling everybody right now, get with us. We want to educate you with that. Definitely get on my newsletter. I can give out that's a newsletter, right? I do a free newsletter. We want to educate. Just go to my website, www.hawkinstax.net, hawkinstax.net. Sign up for the free newsletter and stuff. We do about 3 to 4 blogs a month and do one newsletter a month also as well to educate individuals and stuff and actually guide them. Because if anything I can say other than that, get professional education. Get professional education. Education is key to make sure that you're positioned to take advantage of a lot of things. A good educator will have you to be able to save you a whole lot more money than it costs in other things. Always get educated.
All right.
Wow. Thank you so much. And everyone, if you're on this webinar, if you're on Facebook and we don't have your information here and you want to get Terrence information, just type in right there on our page, you know, or what is it, inboxes, messages. I'm still learning, but you know the lingo where you like send us an email and it only comes to us. Do that on Facebook and we'll get you Terrence information. If you're here on the webinar, you're going to receive his information when we send it out on Monday. So you will get the information because for some reason, his page won't stay up. I don't know what happened, but we appreciate you coming on, Terrence. And again, everyone, we're going to have him to, you know, come back again because as you know, as we always, you know, say, planning is just bringing the future into the present so you can do something about it now. Terrence is on here telling us about things we need to prepare for this year so we can have a better tax year next year because that's when it's going to hit us. All of the money we're earning this year is going to be subject to the new tax changes. So thank you all so much for, you know, for joining us. See, of course,
and while she's trying to click, you guys, just make sure you contact us. Make sure you contact us. We definitely, even though I don't do my own taxes, even though that's not my field anymore, I am very clear and I do understand. I'm definitely designed to help people create a tax solution. We'll use people like Terrence, and we have a few other home-based businesses that we can help you, that drive you to. So we like to find, for me, I've been doing home-based business. I've been in business for 28 years. I've done about 20 different home-based businesses. I have about 2 or 3 that I'm doing now. I believe in them. I believe in them, one, because I believe in the services that they offer. And I also believe in the product, and I believe in the business structure and the connection. So that definitely can turn you on to some businesses. But I also believe after doing 20, and I've been doing this since I was 21 years old, and I'm now 51. I'm not ashamed to tell my age. I think a girl look good for 51. But for 30 years of doing businesses, you want to sometimes find something that jives with your purpose and who you are. Who Terrence is a tax guy. Everything he does relates to his purpose and his dreams and his goals. So what we would like to do is not only just align you with us, because coming with me is very important. I want everybody to join my team. But what's not important for me is for people to be a part of it if they don't have a desire. I'll connect you with many people that we know throughout this industry that may can help you do something that you really want to do. It's not just about the money for me. It's about really you aligning, because don't waste your 2-5 years for something that you really don't want to do. Let's find something that you like to do, and then we can connect you with it. And the purpose of this is to help you save money. So we have 2 businesses that we do that help you to save money, reduce your taxes, increase your income, fix your credit, get out of debt. And that, to me, is everybody's goal. So let us help you with that. Make sure you contact us, and we can help you solve those financial situations.
Absolutely. And there it is, from her lips to your ears. This is our contact information here on the screen. We're going to get you Terrence information. We're also going to put it up on our Facebook page, so you have it there. If you're on Facebook, check in with us, send us that message, or type it, send us to right here to our website, or call us. Just get in contact with us, because we can help you get what you need. Thank you again for joining us. Please come back again next Friday here on the broadcast. And when you come, bring one. We look forward to seeing you next Friday at 10 a.m. And know what, everyone? It's Fed Friday. Friday. Thank you, everyone.
And I want to say thank you to Javon
Thank you,
Walker.
guys.
She's one of our teammates, and she's always on Facebook. And I thank her because sometimes I'm so engrossed in this, I forget to look at it. So I thank Javon for being on Facebook and helping to get us the right information to the people. Thank you. Sorry, y'all. That's my fax line.
Okay, thank you. If you have any questions, send it to us. Otherwise, we'll see you next week here on the broadcast. Have a great day, everyone. It's going to be beautiful.
See you guys.
Thank you, Terrence, again.
Hold on, Terrence. Hold on.
Okay.